All right. All right. A and B. Let me check that out. That is AMBA is Ambarella Inc. on NASDAQ. And when I just restarted this Secretwars special project, revising Stan's training framework, I think it was one of the first ones I did. You could go check it out on the YouTube channel or badcharts.com. And I had set alerts. I had done my practice run here, showing you guys how I do the stage 2s, continuation breakouts, and end of stage 2s, exits, stage 3s, stage 4s, etc. And went through the whole shebang. And now what was pretty cool is I identified this long stage, 1, 2, 3, this long stage 3. And either stage 3 continues stage 4, or it could explode back again as a stage 2. And I had set alerts at these levels, 65 or 6450, about 56, and 42, 41, 90. And I had another alert right here at around the 47, 50 level, and that got triggered. And the week has closed below that. All right, what do we need for a triple confirmation Stan breakdown or entered stage 4? You need breakdown below support line. You need to be below 30-week moving average. You need the RSI going from halfway point to negative territory. And you need volume, and that you need the average volume. The weekly candle has to be double the average volume of the previous 4 weeks or 5 weeks. Don't quite have it now. So what's happening here, I think, is we just need to wait for that final breakdown below this support right here at the 42 level. If we get a candle, let's remove these. If we get a candle that goes below that and closes below the 40 level, or the 41.90 level, I think we're good to go. After that's gonna stage 4 timber, and hopefully we get confirmation on that high volume. Stan says that triple confirmation, the final, the volume indicator, usually it's fear. You don't need that much volume, but I've noticed that on breakdowns, I have a good volume on the red candles. And on the pullbacks, once you're in the stage 4, you want to see contracting volume on the green candles going back up. And that's healthy pullback. So either we get in on the breakout candle, and if we miss it, or it goes in too deep, could wait on the on the pullback on light volume. And that confirms it even more that if it pulls back towards the breakdown line on low volume, then it's a perfect time to enter right there. Let's go check amba on the monthly candle chart from my framework. And forget you see all these lines here. These are lines that were drawn on the weekly candle chart. And on the monthly, it's a different time frame, and they don't apply. You'd redraw your lines on the monthly candle chart with respect to the opens and closes of candles on the monthly candle chart. And all this is noise. So right here, this is the true resistance right there. With the truer resistance, it's true on the weekly. It's true on the daily where you draw them. But if I could class them in importance of more probable chance of that resistance doing its job and resisting you, or more probable chance of that support supporting you, the monthly candles drawn trend lines are way more powerful than the weeklies, and a lot more powerful than the dailies. So now what we have to do is to get that A++ setup is just to see. Let me remove all trend lines. Pew! So clean. Let's identify right here. Okay, so here is our breakdown line on the monthly candle chart. Let's say I wasn't playing Stan, I'd be playing my traditional framework. And This is the almighty powerful support. Close, open, 45.93. So 46. If I get a close below that, right here, then down it goes. And right here, put an alert right there. And 60 is the upwards case. Look, the month is not finished yet. This could easily come back. You see, this there was some candle body here at one time during the month, right? And it just price action sucked back up here, and that's where the lines were drawn. This would be the measured move. So you could have different frameworks, trading frameworks for different time frames. And if they all align, let's say I'm doing my classical trading simple framework, doing measured moves of patterns on the week, on the monthly. And let's say, candle short. Oh, not grabbing anything. Okay, here it is. It's a little short. Just move that. And if they all align, give you signals that go in the same direction, that's synergy. That's what you want. And right now, if I have a monthly close below that 46 level, then it's a breakdown on the monthly candle chart. Very, very powerful signal. Got to be careful here. You might run into some noise. This is a support. And the more I look at charts sometimes, the more you see different patterns. Keep looking at them. And then with practice and time, it gets better. I've been doing Stan for a little while. And my monthly, I haven't been looking at charts with my monthly framework that much. And it's impressive how you could get rusty real fast. And I always have this concept of target price considerations. Stan uses price considerations for, I could call it more, not targets, but stop loss considerations. Put your initial sell stops below the launching pattern, below round number. If you're the traders, below at least 46% below the breakdown line, or if you want to be in safer, below 30-week moving average, etc. Those are his stop loss considerations. On the classical trading framework, there's an entry. The stop loss is always above the monthly candles wick of the breakdown. That's all the protection you need on the monthly candle. And what I have is target considerations. So if I have targets and I see that targets are going to run into some noise, and I want to increase my chances of reaching my probable target and not getting whipsawed, then it gives me an indication that I might be drawing my lines. I might be taking the bigger pattern encompassing the smaller launching pattern target, and giving me a further away target than, not that I should, but that is less probable to be reached than another target. So right here, I have it. And if I would have drawn with this pattern here, it's a closer, more conservative target that's in line with these bottom wicks here. So there's a good chance that I might reach that target, and even if it gets evaporated back up. This is a wall's consideration, previous resistance turn support. And you see how resistance turns support, and even if 1, 2, 3, 4, like a year, more than a year passes by, it's still there. It's really still there. So see, the price action bounces off that resistance turns support. Support is valid, and it could probably still be valid here. Price action might jot around here, creating a bigger pattern, and you just don't want to get whipsawed. You want to reach a target and lock in those profits and move on to the next trade and just accumulate those. Never get greedy. Even for the smallest scale, you don't want to get whipsawed and lose 1%, 1%, 1%. of your nav every time you get whipsawed. You want to stay in the trade the least time possible. You want to reach your target as fast as possible, and you don't want to stick in there too long. Emotional landmines, starting to second guess yourself. Always take the close targets. And I've noticed most of my trades, when I start going on a trading frenzy, but singles starting to pop left and right, the charts that I chose, the closest targets, the most probable ones, 1 or 2 candles later, bam, I'm out. And the other ones which had further targets, zigzag, sometimes comes back up. I get triggered because I got greedy on the sell stop. I put it too close to the breakout line and to increase my position size. And if you get out of that, you're good. All right, guys, take amba's good for now, and let's come back on the monthly chart when we break that what level did I have here? Right here, that 42 level, and hopefully we have the monthly close below that 46 level right here, just to make sure we're on the good side of the trend. All right, see ya.